Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a very, very cold, windy day. It's not why it's called the Windy City, but it's stinking windy. We had -5 wind chills this morning. It was a rough one, but perhaps not as windy as Kansas. So joining me today, as always, Director of Feed Foundations, Mr. Jake Kingsley, and making his first appearance on the Grain Feed, Assistant Professor of Agronomy and Extension Corn Specialist at Purdue University, reporting from West Lafayette, Indiana, Dr. Dan Quinn. Dan, how are you today?
Good. How are you?
I'm doing excellent, thank you. Thank you for being on the show.
Yeah, happy to be here.
Dan, would you mind giving the viewers and listeners just a quick moment to tell everybody about yourself and your role at Purdue?
Yeah, so I'm assistant professor, faculty at Purdue, but I'm also the state corn specialist. So the way I describe that is I kind of have my hands in all aspects of corn production around the state. A lot of my research and extension program is really driven by agronomy, the management of corn across the state, working with clientele, working with stakeholders to help them manage corn better, but also just making sure we have a pretty good pulse on where corn is at and what are the problems that farmers are having around the state and what we could do to address them. So if it has to do with corn, I'm usually involved with it some way or somehow.
Excellent. Very good. Well, we're excited to hear your insights today. So thank you very much for being here. And Jake, of course, got to check in. We've got your dog back there. We've got your plant. How are things doing in Kansas?
Doing all right. We're doing pretty good. It's a little chilly here. Not quite as cold as Chicago.
Sure. But things are okay?
We're doing all right.
Okay. Excellent. That's great to hear. Well, we've got a lot to run through today, especially with our special guest. So, Paige, if you kindly timestamp the broadcast, it is Thursday morning on this chilly day in Chicago. It is 10:15 or so. Here, just quick look at the board. The corn market has tried to make its way a little bit back higher again this morning. We're actually up about 3 cents per bushel or so as we record. This is a relatively new development in the corn market this morning because it was largely stagnant, as it somewhat has been trading in this narrower range here for that March contract, but was below 430, now back above this nice little magnet that is 430 lately for March corn. We have, let's say, Jan beans up about 6-7 cents this morning. Beans trying to make a little comeback as well here. See if Jan beans can make their way a bit closer to $10, just over $9.90 per bushel this morning. And then we have January meal, that not as stubborn little byproduct, is hovering just over $2.90 per ton this morning. So meal down just a hair, kind of the same drill, right? Trading in that somewhat narrower range, but still at least remains under pressure. A good thing for all this buying protein out there this morning. So that's the drill with the quick snapshot at the board. Let's turn her back to Dan, hailing from West Lafayette here this morning. Dan, I think everybody at the moment, as we move into the end of this calendar year, there's somewhat of a, hey, what's coming in January, right? There's a lot of talk about, new president, new Congress, what's going to happen in South America, all that jazz. But I think it's also good to reflect on what the heck happened here in the U.S. So how did the corn production and harvest season wrap up here in the great state of Indiana?
Yeah, I think you look at just Indiana, but the Corn Belt in general, it had really strong yields. You look at Indiana, state record, Illinois, state record. I think Iowa near their state record as well. So really outstanding yields across the Corn Belt. When you look at corn production as a whole, right across the U.S., I think acreage was down. Overall production was down. But in terms of where we've been for the state of Indiana, it's been a really good year. And it's kind of been that case. Indiana has set state record yield averages, I think, the last about 4 out of 6 years. So we've had really outstanding production across the state. And this year, weather's always going to give us some hiccups, with some of the hurricane remnants and dry spells we had. But you look at harvest this year, harvest was record pace. It got so dry at us. Now, in terms of can that be a bad thing? I think for the most part, a lot of places it was actually pretty good thing because farmers could harvest and they could keep harvesting and they got done very early. I had farmers tell me it was the fastest they harvested in 25 years this past year. So it allowed them to maybe save some costs on drying, didn't have a delayed harvest, save some costs on drying. It's always a good thing if farmers can get some more stuff done in the fall when it comes to fertility, tillage, stuff like that. But a lot of really good yields, another projected state record yield average for the state of Indiana. So across the board, just a really good year for the state again. And it's kind of been that way over the last, 5-6 years.
Yeah, well, that's excellent to hear. And Dan, you mentioned the dryness there late in the season. As you said, overall, seemed to be a very good thing in terms of the pace of harvest and getting anything out of the fields. We did see the USDA pull yields back, right? Just a smidgen recently on the last WASDE report. Did you have a feeling that maybe they would potentially do that again, either next week on the December WASDE or perhaps the final print in January? Do you think there's room to take another little smidgen off?
Yeah, what was interesting, I was looking actually today, looking at the USDA report for November. Indiana specifically, we started out pretty strong, I think in the first report that August, then they pulled it back and then it went up again. So really the October report where they dropped it for Indiana, they were really a little concerned with how dry it was. We had some areas that had some disease issues too, but just how dry it was and actually how much that was hurting the crop. And then I think, as you move into November and these final reports, then those are really where you're starting to get dictated on what the actual yields are coming out of those fields. And I think maybe in areas they were actually a little bit better than what they were in the state of Indiana. So it's very rare that you see it drop down and then pick back up again. I usually tend to think if it's going down, it's going to keep going down. I think that's probably the case for some other states, but Indiana, it actually ticked back up a little bit, the most recent report.
Okay, good deal. In terms of the Indiana corn farmer, Dan, I mean, was there a sentiment heading into this harvest that folks were storing more of last year's grain than usual and that potentially intentions to do the same on this crop? Was there somewhat of a vibe there throughout Indiana?
Yeah, I think, a little bit. I think they're trying to catch the best prices they can because of, I think the overall sentiment, right, is the concern for next year. The prices, they've been trending down for a while. So doing everything they can in their own power to capitalize on where it's been, just in terms of good economics coming next year, because they know the sentiment next year is that things will be tighter, right? Overall cost of production is, looking at our Purdue crop cost and return guide, they kind of, variable costs tick up a little bit. Prices aren't as promising next year. We don't have $7-8 corn anymore. We don't have $14 $15 beans anymore. So I think the overall sentiment is that things will be tighter next year. So farmers are being a lot more cautious on ways they market their grain, but also, what they're buying for next year, what they're planning on using in their crop and season next year as well.
I think a lot of the conversations our teams have been having with both our row crop producers, but also our end users, those feeding grain to their animals. A lot of talk right now is what do they do with the current marketing year? March was in a pretty decent range there for a bit, but that March futures window narrowing, people wondering, have we already achieved the low? Will we escalate gradually through the winter? All this talk over front-running purchases in the export market before the Trump administration takes over. But I think sitting on the back burners, as you've already kind of referenced, there is D's 25 corn. That has been in a one general trend, and that has been largely back lower, under pressure, not following, that same choppy, somewhat higher range of March. So I think that's going to be really interesting as we do move through the winter of, is D's 25 corn going to pick back up at all? Or is that too going to hover near a 430? And it's also just interesting to see March and that new crop D's essentially trading the same price as we move in, through the winter here. So maybe an opportunity for the end users to step in and hedge some of those future purchases. But like you said, for that row crop producer, things appear to be getting, a bit tighter. Anything heading into the winter that you'd see as an opportunity for price elevation and moments where the row crop farmer can take advantage of that pricing?
Yeah, I think that's a good question. I think in terms of price elevation, coming up in season, a lot of that's largely going to be what we see largely dictated what goes on in season, right? If there's weather events or issues that happen, I think, acreage for the state of Indiana usually, at least for corn and soybeans, it's pretty stable, right? We've been a little bit above with soybeans recently. Most farmers in the state of Indiana stick pretty true to a 50-50 rotation of corn and beans. So acreage being there, it's just, we've had really good years in terms of weather the last few years, and that's resulted in record crops in a lot of these areas. So whether or not there's some instances where we have, drought stretches or severe weather events that cause disruptions in the market, and maybe you can take advantage of those. The big thing we're working with farmers for next year is really trying to manage their crops as good as they can, but also as efficiently and economically as they can. So you always notice that when we come into a year where margins are a little bit tighter, is farmers maybe look at things a little bit closer in terms of what can I cut, what can I not cut, do I really need this, do I not? When corn is $7-8, the farmers are a lot more apt to try things to make more input applications, maybe raise that fertilizer application. But when margins get tighter, and as probably you all know, right, input costs, fertilizer costs, stuff like that, a lot of times that takes a really long time if it ever comes down, when the grain price is coming down. And they're smart every year, but you almost have to be even smarter coming up this year and really stick to your basics and understand what works, what's been working, and make sure we maintain that. And then some of that ancillary extra stuff that we've been trying that maybe didn't work as well, maybe we can cut that out. So I think, I always have the sentiment that the best farmers do really well when prices are good, and they do well when prices are bad. They know how to make it work through the ups and downs, because it's really crazy. Because it's so crazy and because there's so much unpredictability of what's going to happen, I think you do, like you said, paying attention and making sure you're taking advantage of things when they do fall into your lap.
Good deal. Those are really good insights, Dan. We really appreciate it. And just real quick, for those not as familiar with Indiana, in terms of best producing area, county, whatever that looks like, now, in terms of soils, weather patterns, you name it, where is that sweet spot for corn production in Indiana?
Yeah, a lot of it is actually right around near West Lafayette, where campus is. It's funny, I go through this every year. Indiana, they always say the I states, right? Indiana often gets roped in with Illinois and Iowa, and often people think that Indiana has the soils that Illinois and Iowa has, and that's actually not true. We have a very small section of those soils, and it actually loops through. West Lafayette's actually kind of the border, and it's kind of this, kind of central to northwest, west central area here. But around, central Indiana, this area, really good production up in this area, just largely because of the soils and the really productive prairie soils that Illinois and Iowa have about across the whole state.
Yeah.
We always get roped in with them, but I'm always like, we have a very small percentage of the soils that those states have, and we can still produce, state average of 209 bushels per acre. So, but yeah, right in this area, we have a lot of farmers that can push that 300 bushel mark pretty consistently. And it's largely those productive soils.
Excellent. Well, Dan, we appreciate that. And Jake, we'll turn it over to you, sir. We're talking a lot about the physical production here of corn pricing and reference some of that futures element of pricing. What are you seeing on the basis side of things here this morning?
Well, really over the last, 2 weeks here, basis has been pretty quiet on the corn side of things. We saw a little bit of a pop after harvest, which is pretty typical. I think ethanol margins have been very healthy, and we've had pretty steady export numbers moving out of the country. At least sales have been on. Those have kept basis at a pretty steady number, and by no means strong in the Midwest, but maybe not falling through the floor as we would have expected with such a big crop coming in. I think our next opportunity to see a move in basis, especially for folks that are on the destination end of the rail lines out west and in the southeast, may come come after the first of the year, particularly somewhere between January and March, as taxes and cash flow needs start to push some grain out of the bins, and the market is setting up to tell these folks to deliver against this carry sometime in that JFM period as well. And then by that point, you typically have a pretty good idea of how the South American crop is shaping up as they get into their very early harvest window there sometime in maybe late February or more so in March as they really start to roll into things. All of those things start to come together. And of course, the new administration will have taken office by sometime in late January. What is it, the 20th or 21st? And so there's a handful of things there that should likely entice some grain to start moving out of the Midwest to wherever its end destination is. And that could be an opportunity to settle basis down and capture one last break lower in price on the cash front for our end users here. After that, I think our eyes are on that intended acres report that comes out at the end of March. There's been chatter early that with prices down, as Dan's been talking here, that we may see a shift more heavily into corn acres this next spring for the U.S. farmer. And if that's the case, maybe we catch a little bit of a break in basis there right after the first of the year. And then, of course, as long as the crop comes together well, we'll probably see another little break there towards the end of the growing season, just ahead of harvest next fall. So we'll be monitoring those and advising when to step in on some of that stuff. And then if you look at the protein side, soybean meal seems like it started to drift lower just a few dollars a ton on the basis portion of that price. Sounds like soy oil sales have been moving along pretty nicely on the export channels, with Southeast Asian palm oil at quite a premium. And so those soy oil sales have allowed for more confidence in the forward crush and forward selling of soybean meal and canola meal. And we've really seen a breakdown in canola meal basis, especially in the Midwest. We saw it early in the Western US and the Northwest, where they're closest to the sources of that Canadian product, as China kind of backed away from their purchasing program there that had been pretty aggressive in the first half of this year, really. That's slowed down, and now it's kind of made its way across most of the rest of the U.S. So we're seeing some opportunity to buy very attractive cash values on the protein front. And I think, Jim, you've been talking with a lot of folks about even starting to manage some futures risk on their October 2025 through September of 26 protein, with futures having laid down there. I think you could probably on that crop year look at a futures curve somewhere within a couple dollars of $310 a ton, and you can capture that or close to that for just a handful of dollars, which is rare this early on. A couple of good opportunities in the protein space, and then a bunch of byproducts that are starting to at least load the pipeline as again, ethanol grind is cruising right along, and soy crush is coming up post-harvest, starting to look at some of the byproducts that come off of those sorts of things. Feel a little bit of pressure, or at least feel confidence in availability of them, which then typically is followed by pressure on price. So definitely some opportunity here for feed buyers.
Okay. Thank you for that, Jake. Yeah, your note there is spot on, right, of what we've been telling folks about, that new crop year. And we kind of referenced that talking to Dan as well of, it's not just a corn opportunity at this stage. There are some opportunities at this point for protein looking out of that D's 25. So I know it's kind of hard to believe we're in D's 24. We still got a couple weeks till Christmas, but it is time, especially for the end users right now, to take advantage of some of these futures prices as they kind of churn against the lows. So very good insights, Jake. Very good insights from you both, gentlemen. Thank you so much. Dan, thank you very much for being on the show today. This was really great. Thanks for being here.
Yeah, thanks for having me.
And Purdue, great school, a lot of fun. I went to Miami of Ohio, so there's a Steak and Shake just right off of the I-65 West Lafayette exit that I don't want to exaggerate, but I'll say I've been there 50 times.
Yeah, just don't discuss football, Talk about basketball.
Yeah, exactly. For this year, but Boilermakers have always had some pretty good runs here. But yeah, this year, focus on basketball. But Dan, thank you so much. And we'd also like to thank Corey and the Evrag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. Greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.